In this video, I'm going to cover a similar example to problem 819, and I'm going to focus on in this first video the first three items: expected cash collections for May, expected cash disbursements for May, and a cash budget for May. I'm going to have a separate video for the budgeted income statement and budgeted balance sheet. First thing we'll focus on is point number 1, expected cash collections from customers for May. I will point out before we start moving on that the balance sheet information that we're presented here is as of the end of April. Keep in mind, we need to project for May, but this is as of the end of April. So since we're talking about cash collections from customers, we assume that this would be related to sales. And I've got a point here related to sales. So let's start working through here and figure out what would be the cash collections related to sales in the month of May. Well, the first item is any cash sales. So for example, they say that sales altogether are budgeted to be 263,000, but of those total sales, we're going to collect 78,900 of those right away are going to be on cash, not on credit. They're going to be in cash. So that's going to flow through immediately. Then we have to consider the fact that the remaining amount is going to be credit sales. And let's look at their credit policy. 1/2 of the month's credit sales are collected in the month the sales are made, and the remainder is collected in the following month. All of the April 30th accounts receivable, and if we look over here at the balance sheet, 58,500 will be collected in May. So we consider that as of all the April sales, 50% were collected in April. The remaining 50%, 58,500, will be collected in May. So we'll list that 58,500 and add that on. We also have to consider the credit sales for May. So we're going to take the 263,000 total sales minus the 78,900 collected immediately in regards to cash. Subtract that from the 263,000, multiply it times 50% because keep in mind 50% is collected in the month of sale, and we get $92,050 of credit sales will be collected in the month of May related to our May sales. I also want you to keep in mind, I know we don't need this information to solve this part of the problem, but 50% of the May credit sales are collected in May, but the other 50%, the other 92,050, are going to be owed from customers. So ultimately, they will be accounts receivable on the May 31st balance sheet. So jot that information down because you're going to need that information for the balance sheet. Let's go back to the problem we're working on so far. We've got cash sales in May of 78,900. April credit sales collected in May of 58,500, and May credit sales collected in May of 92,050. So total cash collections from customers are $229,450. Let's move on to the second part of the problem where we're going to focus on expected cash disbursements, and it specifies we're only talking about merchandise purchases for the month of May. Again, I tried to highlight what seemed like to be relevant information, accounts payable from April timeframe, and also point B gives us inventory related and purchase related information. So again, let's start pulling this together. Number 1, let's start to read through here. Purchase of inventory are expected to total $193,000 during May. All of these purchases will be on account, meaning we didn't pay cash right away. We had an IOU to our supplier or vendor. 40% of this will be paid for in the month of the purchase, the remainder in the following month. So we have to consider that 60% of the April sales from the prior month are ultimately going to get collected in May. And they point out that all of the April 30th accounts payable, because that would be that 60% of April sales, right here is 67,750, are going to be paid during May. So we're going to list that April 30th accounts payable balance of 67,750. Now we have to be concerned about the May purchases of 193,000. They indicate that 40% of these purchases are paid for in the month of purchase. So 40% of 193,000 is 77,200. That's what will flow in the month of May. I also want to point out, somewhat similar to what we talked about cash collections, of that 193,000, 60% will be collected in the following month. So it will appear on the balance sheet as accounts payable, an IOU to our vendor supplier. So 60% of that 193,000 is 115,800. That's going to be accounts payable on our May 31st balance sheet. Again, do I need that information as solve point number 2? No, but I need that information later on when I have to do the budgeted balance sheet, so go ahead and jot that down. Going back to our problem, the April purchases that are paid for in May is $67,750. The May credit purchases that are paid for in May is $77,200. Add those two together, our total cash disbursements related to inventory is going to be $144,950. So far, point 1 and 2 we've tackled. Let's go ahead and move on to point 3, where we go ahead and pull together the whole entire cash budget. What's our starting point? Our starting point for our projected cash budget for May is our ending balance from April, which is also our beginning balance for May. We can get that from our balance sheet, so that's going to be $18,500. We've already done some of the hard work in number 1, in that we calculated that our collections from customers are estimated to be $229,450. Again, I just got that from part number 1, the total. If I add that $229,450 projected cash collection from customers to our beginning cash balance of $18,500, we get, before we have any disbursements, cash available of $247,950. Obviously, we're going to project that we're going to have to make some payments. One of those is cash disbursements related to inventory. Again, point number 2, we totaled up that our projected cash payments for purchase of inventory for May are $144,950. Now, we can't stop here. We also have to consider, are there any disbursements or payments expected for any non-inventory related items? So let's search through the different points within our setup here. And D does indicate that selling and administrative expenses for May, which are not inventory related expenses, are budgeted at $73,200 exclusive of depreciation. That means it does not include depreciation. All of these expenses will be paid in cash. They do indicate the depreciation is budgeted at $4,650, but keep in mind depreciation is a non-cash expense. So therefore, we need to subtract out our cash payments for selling administrative expenses of $73,200. Now let's look through our problem and see, is there anything else that we paid for and are projecting to pay for in May? Point number F. New refrigerating equipment costing $11,900 will be purchased for cash during May. Again, this wouldn't be represented in inventory. This wouldn't be represented in selling administrative expenses because we're buying some type of equipment here. So we'll show this $11,900 as an additional disbursement or outflow of cash. Add together our projected purchase of inventory of $144,950, our projected selling administrative expenses of $73,200 paid in cash, our cash payment projected for purchase of equipment of $11,900, and total expected cash disbursements are $230,050. Subtract that $230,050 projected disbursements from the cash available of $247,950, and we get, in this situation, because we have more cash available than expected disbursements, excess of cash available over disbursements of $17,900. We're not quite finished. Keep in mind, we have to consider, was there any financing? Was there any specific borrowing for this company? So again, we'll start searching through our problem. Well, one thing we can look at is saying, okay, we did have, as of the end of April, notes payable of $15,800. So we have to consider, did we make any payments for that? We also have to read through our scenario. Point G seems relevant to this particular financing section. It mentions during May the company is going to borrow $27,200 from its bank by giving a new note payable, so it doesn't have anything to do with the existing $15,800, to the bank for that amount. The new note will be due in 1 year. So considering that we borrowed, we're going to have an inflow from the borrowing of $27,200 expected in the month of May. We also have to look through and say, did we pay off anything related to this existing $15,800? So again, looking through our different points, I see E says the note payable on April 30th balance sheet will be paid for during May, including we're going to pay for an additional $210 in interest. And it says all that interest relates to the month of May. So we've got a couple additional outflows here, and those are going to appear in our financing section. One, the repayment of the note of $15,800 is going to be an outflow. That's why it shows negative here. And also interest is going to be a payment or an outflow of $210. If we add up all our financing, a borrowing or inflow projected of $27,200, a repayment of $15,800, interest payment of $210, that's a total inflow from financing of $11,190. Because it's an inflow, we'll add it to our excess of cash available over cash disbursements, and that gives us a projected ending balance of cash for May of $29,090. Now that finishes off our cash budget. I want you to keep in mind that this ending cash balance of $29,090 is also going to be the expected cash balance that will appear on our May 31st balance sheet. I realize we're not to the balance sheet yet, but we're eventually going to get there, so go ahead and jot down this amount so you don't have to calculate it later. I'm going to go ahead and move on to the second video where I cover the balance sheet and also the income statement.